I've got so many updates, I don't even know where to begin right now. But let's just say that if you're in California, Florida, Texas, Minnesota, I've got a list of over 20 different states. Those are just some of the ones popping into my head right now. I've got some updates for you, and it's all good news, as we've got state and federal updates. So let's just start off with the federal update for those of you interested, and that is that the IRS has announced that all the stimulus checks of the past that you receive from states, they're tax-free. You don't have to pay taxes on it. They've issued some guidance. I'm going to give you a list of the states. In addition to that, though, some states, people already started filing their taxes. So this information is a little bit late. And take a look. What do you do if you already paid taxes on your relief or stimulus checks in California? As that middle-class tax relief payment, a lot of people paid on it. They got 1099s saying they had to pay. And those are actually still going out. Some people still haven't even got them yet, but they got 1099s saying they owed taxes. Also, take a look at this. If you're in the great state of Texas, well, they have a ton of money sitting left over. Governor Greg Abbott proposes devoting $15 billion to property taxes in budget plan, as they're saying, you know what? Texas, the real estate isn't too expensive, but those taxes on real estate, they can be pretty hefty taxes. So trying to help you out with that, I'm going to give you a little bit of information, and also take a look, like I said, proposals for more stimulus coming in 2023. This state may soon send $2,600 stimulus checks, one of the larger checks that we've seen so far, if this goes through. Just to clarify, this just came out today, so we're going to be seeing, I'm going to give you all the updates as to what's unfolding so you know what's going on. And if you want a list of all of the stimulus checks for states, cities, and counties that have already gone out, I've got a list of over 100 different ones that most people don't even know exist. And I put it together, and it's all at www.reliefroadmap.com. If you're interested, you can go there and check out that list right after this video. But let's dive into this, and I always cite all the sources, put them on the screen, read right from them so you can see for yourself that it's the latest and know that you are up to date. And if you appreciate that, do me a favor before we dive in, smash the like button, subscribe to stay up to date. And with that being said, let's go ahead and take a look. All right, so let's start off with California and this update that came out yesterday. And what do you do if you already paid taxes for your relief or stimulus checks in California? As we had heard that the IRS said that all of it is tax-free. You don't have to claim it as earned income, even though those 1099s went out in California that were a little bit confusing. It says those in California who have received a check through the Middle Class Tax Relief Program will not be required to pay federal income tax. Here's what you need to know. Earlier this month, the IRS warned taxpayers who had received a stimulus check for their state to postpone filing their tax returns until the agency determined if the payments were going to be counted as taxable income. So they had said, wait, do not file. And then later on, about a week later, they came out and said, it's okay to go ahead and file. Don't claim it as earned income. The guidance is now available. I'm going to be sharing that with you here in just a second. And for taxpayers in California, the news is good because the middle class tax refund is classified as a payment made for the promotion of the general welfare or as a disaster relief payment. The checks will not be taxed at a federal level because they're saying it's a part of the disaster relief that's going out due to the pandemic, so they are not going to be charging taxes on it. The tax authority cited the pandemic emergency declaration that the White House as a justification for these payments to be treated as a relief program. Since the White House plans to end the pandemic emergency declaration in May, I've let you guys know about that. They're saying May is going to be the official end of the pandemic. In the future, these types of payments may be subject to federal tax. So after May of 2023, if you receive state, county, or city stimulus provisions or excess funds, they might be taxed, they're saying. State governments should be aware that when the pandemic state of emergency is lifted, any payments made to their residents are likely to be taxed, and recipients should be informed of that fact to ensure that they are not caught by surprise when filing their federal returns. So please be aware that any additional stimulus past that point might be taxed. What about payments made by other states? So here is a list that you're going to want to see. The majority of state-level payments made last year will not be taxed, and the IRS justified the position by saying that the decision is in the best interest of sound tax administration. So in addition to this being a state of emergency, it's also just a whole lot easier to say you don't have to claim it on your taxes. For tax filing purposes, helps out a whole lot. Now, in addition to residents of California, the Golden state, those who receive checks in Alaska, Colorado, Connecticut, Delaware, Florida, Hawaii, Idaho, Illinois, Indiana, Maine, New Jersey, New Mexico, New York, Oregon, Pennsylvania, and Rhode Island will not be required to report the payments as income to the IRS. So those are the states where if you receive state checks, you don't got to worry about it. Now, also, that is not the comprehensive list. As I mentioned, there's well over 100 different ones for states, cities, and counties, but those are the ones the IRS has announced you don't got to file taxes. Now, additionally, aside from welfare and disaster relief payments, the IRS has stated that this year, no taxes will be levied against payments issued as a refund of state taxes paid where the recipient claimed the standard deduction or itemized their deductions but did not receive a tax benefit. Residents in this situation in Georgia, Massachusetts, South Carolina, and Virginia who have already submitted their returns do not need to report any amendments to the federal tax authority either. So they're saying you don't have to worry about it. They see it. They're going to take care of it. So that is good news for those states. Now, if you already filed, though, we're still waiting to see if you're going to need additional information, like, say, for the state of California. Because in this article, they just say that they said you don't have to do taxes. But what if you already filed? Well, we're waiting to see. Now, we're going to see if the IRS is going to issue out any more guidance on this. But this is as of February 10th. And it pretty much covers everything that we just went through. They named Georgia, Massachusetts, South Carolina, and Virginia. They name off all the states where it's tax-free, as you can see. But other than that, we haven't received any additional information about amendments or if they're going to be doing things on their end to make sure that people don't have to pay taxes if they already did so one filing. So we will see. I will keep you up to date. So that is the list of the states. Now, in addition to that, take a look at this. There is surplus excess funds in the state of Texas, and we're hearing that this is not just Texas, but all across the country. There's lots of leftover funds, literally tens of billions of dollars they're trying to figure out what to do with, and some of them are issuing stimulus, tax rebates, tax cuts. So link in the description below to this article that came out 3 days ago that says Governor Greg Abbott is proposing devoting $15 billion to property tax cuts in the budget plan. Abbott's spending proposals also include $750 million on school safety and mental health services and postpartum Medicaid to a year. So if you're in Texas, listen up. Governor Greg Abbott wants lawmakers to spend $15 billion to lower Texans' property taxes and at least $750 million on school safety measures such as security and expanding mental health services while continuing to fully fund his border safety operations according to his 2024-2025 budget proposal distributed on Thursday. So this just came out a couple days ago. To build the Texas of tomorrow, we must continue the state's unrelenting efforts to build infrastructure, grow the energy sector, improve job training and public education, and ensure healthcare access, all while keeping Texans safe and preserving the freedoms we enjoy today for future generations. Now, the proposal lays out for the first time how Abbott wants lawmakers to deliver property tax cuts, an idea agreed upon by Republicans in both chambers, even as details vary among plans. And he said, our mighty Texas economy has produced another record. We now have the largest budget surplus in history for our state. But make no mistake, that money does not belong to the government. It belongs to the taxpayers. Now, let me know your thoughts. Do you think that property tax cuts is the best use of those funds? Do you think that it should go towards stimulus checks? Should it go towards other things? Let me know your thoughts. But the proposal is now out for what they want to do. Lawmakers are required to pass a balanced budget before the end of the session. The new budget is typically approved near the end of May. Now, in his Thursday speech, he named 7 emergency items that lawmakers can vote on immediately: cutting property taxes in Texas, ending COVID-19 restrictions forever, expanding school choice, making schools safer, ending revolving door bail policies, securing the state's border with Mexico, and cracking down on fentanyl. Now, specifically on reducing property taxes, he said that we must and we will do more to provide meaningful tax relief to homeowners and businesses across the state. Thankfully, a robustly growing economy and an extraordinary revenue surplus in the state's budget has afforded us the opportunity to do so. Now, absent from Abbott's budget proposal is any mention of an increase in the state's homestead exemption on school district taxes or the dollar amount of the home's value that can't be taxed. So there's still some bits of information that need to be included. Raising the exemption is a top priority for Patrick, who has called for using $3 billion to raise the exemption from $40,000 to $70,000, but doing so would benefit only homeowners, critics have noted, which means that more of the burden for paying the property taxes would fall on renters and businesses. But Abbott and Patrick appear aligned on the ideas of cutting property taxes for businesses pay on personal property like furniture and equipment, with Abbott expressing support for targeted relief for businesses by increasing the exemption for personal property. Abbott also called for freezing county property taxes for seniors and making sure they automatically receive an additional $10,000 homestead exemption already set aside for seniors. Notably, Abbott said that budget writers in the House and the Senate should look for federal funds made available under the bills like the Infrastructure Investment and Job Act and the Inflation Reduction Act, signature achievements of President Joe Biden, and determine which programs are worthwhile to pursue. So that is going on in the state of Texas. They're proposing that $15 billion. That is by far the majority of what is being proposed for the excess amounts of surplus. But if anything changes or if there's any other updates, I will be sure to keep you up to date in Texas. And yet another stimulus check proposal coming out, and this state may soon send $2,600 stimulus checks. Take a look at this, you guys. It says Minnesota lawmakers find themselves in a unique position. The state is sitting on a huge budget surplus and must now decide how to spend the money. In January, Governor Tim Walz announced a plan promising residents the largest package of tax cuts in state history. But that's not all. As a part of the ambitious plan, as many as 2.5 million Minnesota households would receive a rebate check totaling $2,600. Now, here is the proposal for the surplus. You can see the eligibility. You can also see the other items that are currently proposed. And I'm going to link this in the description below if you'd like to check it out. Again, this is just a proposal. This is not law. It's not official. I'm just letting you know what's starting to come out here. And also, Minnesota is not the only one. Like I said, there's Texas, there's other states. There's a lot coming out on these, and if you want to know, you want to keep that updated list going, that's at www.reliefroadmap.com. And also, if you want to know the latest on Social Security, I've got updates on SSI and everything unfolding with that. Check out this video next. If you missed that update, I'll keep you up to speed on everything. But with that being said, thank you so much for joining me. Like, subscribe, and I'll catch you in the next one. Take care. God bless. This is Steve.